Hi, this is Selena again, and if you watch any of our previous videos, then you'll know that we're about to bring you some great financial education. Today we have a great topic about ACA plans and how they work with your taxes. If you purchase insurance from the health insurance marketplace, or if you purchase insurance off of your state-based exchange and you get the Obamacare plan, it's going to be a certain way that you're going to work with your taxes, and you may have seen something called a 1095-A. So we're going to talk about how that works. If you like our video, make sure you subscribe. We are building our channel. We need subscriberships, and we also, of course, we would appreciate it if you like our video and share our content if you like it and you feel inclined to do so. So let's get into it. When you first set up your plan, you may be qualified to get financial assistance from the federal government called an advanced premium tax credit. That tax credit is also called a subsidy, and what it is, it's federal government money that they help you with to help pay your monthly payments to the insurance company, which is also known as your premium. So when you receive insurance on the Obamacare system, you will be approved if your income and your family size and all the other things I talked about in the other video where I explained a lot about the Obamacare plans. If you qualify, you will get a certain amount of credit. So let's say, for example, your insurance is $500 and you receive $400 a month in credit based on the statements on your income and your projected income for the year. So then at the end of the year, you're going to receive something called a 1095-A form. And that 1095-A tax form is a form that you receive from the insurance marketplace, and they will show how much government assistance you received for that previous year's insurance. So right now, let's say we're in 2024 right now. We're in tax season right now. And people who purchased insurance this way in 2023, they all received the 1095-A form in January from their insurance exchange, whether it's the healthcare marketplace or the health insurance marketplace or their other state-based exchange. But either way, you're going to get this federal tax form called the 1095-A. It's going to show that government assistance that you receive. So in my example, let's say $400 a month of government assistance, which was advanced to them to help them purchase the insurance the previous year. So when you go to file your taxes, you must take your 1095-A form and give them to your tax preparer. Some people may have more than one 1095-A form. It could be that you had multiple people on the plan with different plans, so you end up with multiple 1095-As, or it could be that you had a change in your coverage somewhere mid-year, and so that generated multiple 1095-A forms. So make sure you take all the ones that you get, whether you get one or two or three different 1095-A forms, take them all to your tax preparer, talk to your agent to make sure if you can't find your 1095-A, if you have an insurance agent or broker that helped you with your insurance, they can also pull the 1095-A and email it to you. But you want to make sure you give that form to your tax preparer. So what happens when the tax preparer receives that form from you? Well, along with your W-2s and 1099s and all the other things that you're going to give your tax preparer, they enter it into their tax software. And then they're going to enter the information from the 1095-A into the tax software, and you're going to do something called a reconciliation. That reconciliation means that you're going to reconcile the government assistance that you received the previous year, because you received that government assistance based on statements on your application for that previous year, and you received government assistance based on a certain level of income, a certain level of household size. And so when you file your taxes, they're going to match the information and see if and determine whether or not you received the right amount of credit the previous year. So you're either going to be underestimating from last year, or you're going to overestimate from last year. So for example, let's say, well, I'm single, and when you applied, okay, let's say when you applied as single with $25,000 of income expectation. That's how you applied, okay? Now you got the 1095-A, you're gonna go file your taxes. The truth is gonna come out, because you're gonna either receive your W-2s or you're gonna file your self-employment, and then you're gonna have your deductions and everything, and then the taxable portion of your income, which is usually what ends up on line 11 of your 1040, which is your adjusted gross income, the real number comes out. So let's say you end up making adjusted gross income of $30,000 instead of the $25,000 that you applied at. Well, in that situation, you received too much credit, and you're going to have to repay any undeserved portion of that government assistance back to the federal government and in the form of your taxes. So it's going to be something that's calculated inside of your tax return. You're not going to see it unless you actually go to a particular page in your taxes called on Form 8962. It'll show the repayment. Okay, so how does that work? Basically, let's say you paid $50 a month for your insurance, but you should have paid $80 a month for your insurance based on that higher income. Then you will have to repay the $30 difference for the number of months that you had government assistance. So that is called a reconciliation. Sometimes you may have overestimated your income. Maybe you said, I'm going to make $25,000, and you turn around and make $20,000. Then in that case, you will get a refund of any additional tax credit that you should have received based on a lower income. So let's say you paid $80 and you really should have paid $50 because you ended up making less money. So in that case, they will refund you the amount that they should have helped you more. So that $30 additional credit that you should have received is going to be refunded to you on your actual taxes. So there's a few things that can happen. Let's say when you first apply, you apply as married, filing joint with two dependents. And let's say along the way you ended up having another baby. Then your household size actually went from 4, and then when you file your taxes, it goes to 5. Well, normally the larger your household at the same level of income, let's say your income is $70,000 for your household income, and that's how you apply, but now you actually increased your family size. Well, you should have received more income. In a situation like that, you'll probably get a refund because you increased your household size. So the larger your household is, the more credit you should have received. The smaller the household is, the less credit you receive. Let's say you apply at a family of 4, but then one of your kids ended up working and they ended up not being your dependent anymore. Then in that case, your tax household size actually decreased from the original application to your actual tax filing upon reconciliation. That's going to affect the credit and how much you should have received. So there's a lot of things that can, besides the income, that can affect your tax credit reconciliation. Another thing that can happen is if you remember that if you receive Social Security income, that also counts as income. So make sure you add that to any W-2s or anything like that. So on your taxes on Form 1040, line 11, that's your adjusted gross income. But the number they really look at is called modified adjusted gross income. So that's you need to add your Social Security to that adjusted gross income number. So this is your total modified adjusted gross income. So another very important thing to keep in mind too is that when you reconcile on your taxes, the tax filing status is also very important. For example, you have single, you have married filing joint, married filing separate, and of course you have head of household. Well, when you're filing as head of household, you're really saying you're unmarried and you have a dependent. So if you are filing if you applied one way and you turn around and file another way, that could also affect how much you have to repay or whether or not you're going to get a refund from your health insurance premiums. I see sometimes people say that they're married filing joint when they apply for the health insurance. Then the following year, when they get their 1095As, they turn around and file married filing separate. Well, married filing separate is not a qualifying status to receive the government assistance. So what happens is you end up repaying the government assistance that you received the previous year if you don't file joint like you're supposed to. So if you change and you file separate, you're going to repay government assistance that you received the previous year. So keep that in mind as well if you're married. you should be filing married, filing joint in order to maintain your eligibility status. Now, another thing about repayments that can be very helpful for many people is they do have repayment limits. A repayment limit is when you have to repay, but you don't repay all of your undeserved credit. You may only repay up to a certain limits. Okay, if you just I don't want to put something on YouTube because this changes every year, but if you just Google premium tax credit repayment limits, you can find many websites that have charts that show you the maximum repayments that you would pay back. So for example, if you're single and then you started off applying for the insurance when you had very low income, and then later you changed your job, and then you didn't report that change to the marketplace, and then when you got your 1095, you ended up with a large W-2 a much larger W-2 income than you first applied, then you have to pay back a lot of money. That can happen. But they also have repayment limits. For example, if you don't go over $51,000, then you only have to pay back a certain amount of money. So this is called a repayment limit, whereas you should pay back $3,000, but you only have to pay back $1,800, for example. I'm just using some examples. If, like I say, if you Google health insurance premium tax credit repayment limits, then you will be able to see the limits on what and what income you need to be at to be able to meet those limits. And that way it will protect you from having to pay back too much credit, of undeserved credit. Now, some of the things that you can do upon filing taxes to control your modified adjusted gross income a little bit is you can do things even after the end of the year to reduce your modified income. If you, for some reason, end up with a lot more income than you originally expected, whether you did a lot of overtime, or maybe you sold a property, or maybe you sold some investments and ended up with a large gain. There are still things that you can do to reduce your modified adjusted gross income, such as contributing to a traditional IRA. For example, you can contribute into a traditional IRA and get a reduction on your modified adjusted gross income. If you contribute $5,000, for example, then whatever the income you have will be reduced by $5,000. And you have to make those contributions before the end of tax time, which is usually somewhere around April 15th. So what you want to do is talk to your tax preparer, talk to your CPA, talk to your accountant, whoever does your taxes. They are the actual professional. I am not a tax professional. I am an insurance expert, but you can talk to your tax professional and they can help you to see what you need to do when you file your taxes to make the repayments that you might have or refunds that you're due to you to work out to where you have a happy medium between having good insurance and settling it with the IRS come tax time, to where you're not getting an undesirable effect at the end of that. So talk to your tax preparer, work with your health insurance expert as well, and then you can make it where you understand how taxes work with your insurance, and at the same time you have great insurance to take care of yourself and your family when these medical charges arise. So thank you so much for tuning in today. Make sure you like and subscribe, share the video, comment if you have any questions. I love to see those comments in the comment section, and give us some ideas if you'd like to see other videos about a specific topic. Thank you so much for tuning in.